Hello and welcome to Property Question Time. I'm Lucia France and this is a show where we answer any and all of your questions about property with our lovely panel of experts. Joining me in the studio today, we have Stephen Galpin. Welcome to you, Stephen.
Hi.
Stephen is a property consultant in London. Welcome to Joanna Leggett, founding partner of Leggett Immobilier in France, and Paul Mahoney, managing director of Nova Financial Group. So welcome to you all. We will get started with the first question to you today, Stephen. Okay. Is there much value these days in having a commercial property in a small town with living accommodation above? I'm thinking of buying and converting one into purely residential, which seems a more sensible use of the space. What do you think?
Right, well again, this is a subject we've covered before, and this is about the high streets and perhaps the future of high streets. I'd have to say that traditionally you'll have a bit of a struggle converting a commercial property into pure residential. The local councils will start to say, well, hold on a minute, that's going to cut down employment. You're going to be replacing an employable situation with a non-employable situation. You will have a resistance. You might well get it. Is pure residential suitable for high street use? I'm not too sure. You've got things to consider like parking, depending of course where you are, which town it is. That can be a huge consideration and have a huge effect on the value of your property, especially if you're in a small town where pretty well everywhere you've got to go to out of town you're going to have to drive to.
Right,
So where you're going to put your car. Now, probably Paul will answer this better than I, but I think also you might find that if you're looking to sell part of this, perhaps you're going to convert the bottom half into one flat and then the upper into another flat. If you're not successful and you're left with the shop at the bottom to rent, we've talked about the ability to be able to let commercial property. It's a different discipline from letting a flat. It's far more complex, far more difficult. But more importantly, I know a lot of the lenders still have a resistance to lend on residential property that's above commercial property. I don't know why that is, Paul.
Really?
Perhaps you can explain that. I don't know.
The strange reason for it is in case a curry shop or something goes in on the ground floor and the fumes and that sort of thing. That's the reasoning from a bank's perspective. I think they are becoming more flexible around it in that they can see that in some cases there is actually utility to having a cafe or a gym or something like that.
And technology's moved on as well in terms of extraction and that sort of thing.
Exactly, yeah. But that is the traditional reason.
Right, okay.
But it is a consideration, and especially if you're in a small town with a limited number of lenders that will look at that sort of area, then that could be quite a consideration, because any successful property development, whether it's for let, investment or whatever else, you've got to have a market that can afford and fund what they want to buy. And if you can't, you're in a mess.
Well, also with things that you were mentioning like parking, etc., in many town centres is a huge problem. And even with new build developments, most places sold only come with one parking space. So that could be a real consideration to think about. Is there any situation where you'd say yes, definitely go for it, or?
To be honest, I don't think there is. I think if you want to go into residential investment, then go into residential investment. I think, there's an old saying, isn't there, to be a pioneer is extremely expensive.
And I think we'll leave that question there.
I think you should.
Nicely put. Thank you very much, Stephen. Okay, Joanna, on to your next question. I hope I'll do my French accent correctly here. We are planning to build a double garage and are struggling through the demande de permis de construire form. It's a lot more complex than the déclaration travaux we submitted previously for a small shed. We had a search through and had not much luck finding a guide to completing this form. Any advice on how to complete this form?
Okay, well, firstly, it's a planning application, and I would personally advise that you actually get somebody to do it for you. I would get an architect to draw up the plans. In the old days, you used to be able to go down to your local mayor with a bottle of whiskey and a couple of photographs, and, he'd help you fill it out. And they were the good old days. However, later on when you came to sell it, the mayor doing a little shake hand doesn't count anymore.
Right, yeah.
And obviously, you'd have to get retrospective planning permission for whatever you've built. Not the shed, by the way, that's absolutely fine.
Okay.
But for that type of consent, my advice, unless you speak perfect French, I would go to the planning office. If you do speak perfect French, give them a call, make an appointment, take down your documents, your paperwork and your design, and they will help you to fill in the form. There isn't any sort of guide online. You might go onto forums where other people have done similar things, but the laws change all the time, so I wouldn't rely on those forums. I would either go to the planning department yourself, the Mary can advise which planning department is relevant for your commune, or I would get an architect. It's not expensive. For a double garage, you'd probably be looking at around €1,000. You know, bearing in mind the double garage is probably going to cost around €25,000 to build. I would get the architect to draw up the plans, because the architect will take it from start to finish. They'll also know the area. They'll be able to tell you, well, actually, you're not going to get permission there because you're close to a church, or etc., etc., and they'll be able to advise you before you even put the form in. And I think it's a lot simpler way of doing it, and you're guaranteed that it's signed off properly, it's been designed properly, etc., rather than going back to the old ways with the old bottle of whiskey and shake hands.
Although it does sound like fun. Here as well, where they're talking about creating this double garage, I mean, it sounds quite simple, but quite often in the UK when you go for planning, there's a bit of back and forth, or a lot of back and forth in terms of going back with a different design. Is that the case in France as well?
It depends where you are. I mean, if you're in a city, then obviously it's very much the same as it is in the UK. If you're in rural France, then they do encourage development as long as it's in, you know, an area where you can build. Because obviously they get more taxes, you've got a bigger property, the taxes stay local, so it helps the local community, etc. And they're quite good at giving planning permission. However, if you're in a historic village or you are near a historic building such as a church, for example, if you're near to a church, you won't be allowed an in-ground swimming pool. So, you know, you'd have to build an above ground. What difference that makes, I've no idea, but it's just one of those French laws. And that's the thing, you know, before you go ahead and start putting your plans together, an architect would be able to help you, or a meeting with your local planning department, as you would do in the UK.
Absolutely. And just quickly, the declaration of work, is that something you can do post having built?
The declaration of travaux is basically, you can do things, that's a form to declare you're doing something that doesn't need planning permission. So for example, a shed, you're just declaring that you're putting a shed up, and you don't need full planning permission for that. But anything, for example, like a garage, you would need planning permission.
And if you didn't declare it, is there any comeback on that kind of thing?
Well, yes, the local mayor could see it and be quite annoyed that nobody'd asked for planning permission, and we have had people having to take buildings down that they have built, or have done the old handshake with the mayor, and then the planning department finds out, and you know, you end up having to take it down.
You have to buy even more whiskey.
So I mean, those good old days are gone, and I would just treat it exactly the same as you would if you were in the UK. You know, go down the right channels, get your proper planning permission, get somebody to draw it up and do the form correctly for you.
Fantastic. Thank you very much, Joanna. And moving on to Paul for your next question. This is quite a long question, so bear with me. Okay, I'm considering investing in a BTL, a buy-to-let, and looking for some advice. I currently am not an owner-occupier due to the fact of house prices being much higher than I could afford on a single-person mortgage. I've recently inherited some money, and I'm looking at a buy-to-let in an area that I know very well that is much cheaper to buy a property. I could afford a property of 80k by putting down a 20% on a buy-to-let. My IFA has found me a few lenders who would lend to me on this basis. I've worked out a yield of around 10% a year with a rent of $450 to $500 per calendar month. I've read that the rules are changing the amount of income tax that I'd have to pay on the income. I just need to know whether it's worth it, or is there a better way to grow my 20k over the next 5 or so years? Thanks.
Okay.
That's nice. We don't often get thanks at the end.
So, haven't heard the answer yet.
This is something that's quite common. It's something that I didn't coin. I actually took it from Australia. Rent vesting, so people that continue to rent and invest, because you know, especially in London, it's very, very expensive to buy now. A lot of young professionals who can't afford to buy where they want to live continue to rent in desirable locations and invest in more affordable areas where they can still get on the property ladder, but at a more affordable price. For this specific person, you know, £80,000 price point, 20% deposit. As a first-time buyer, they will find that difficult. The average maximum for most lenders is 75% for a buy-to-let, and with some lenders it's even lower for first-time buyers, especially if you don't own a residential property. They've said that their brokers found them some options, and they probably have. As to whether that will work will depend on their financial position and the property they're buying. Although buy-to-let mortgages are generally a lot more about the property you're buying, because that's the serviceability. As a first-time buyer, there's a bit more risk in the lender's mind, because it's only the property that you're buying that they have as security. You don't have any other assets they could come after if something went wrong. £80,000 in the UK is definitely the lower end of the market. So I'd be asking, well, where is this property? Does it make sense as a place to invest, and does the property stack up? They said a 10% yield, but £400 rent per month.
Yeah, 450 to 500.
I think they've done their maths a bit wrong there, because
Okay.
that's a 5% yield. That might change their decision to invest. So assess the area, assess the property, work out what your mortgage options are. There probably are options that are worth investing in for this person, but seek professional advice and make sure you do it in a way that's actually going to help you toward your end goals, rather than just investing for the sake of it.
And I'm not sure whether this is something that you cover yourself, but where they say they've read that the rules are changing regarding the amount of income tax they'd have to pay on income. Is that something to
They are. So
consider?
Section 24, it changes the way that buy-to-let mortgage interest is able to be tax deductible.
Right.
And essentially the way that it's written is quite misleading. It says that by 2021, buy-to-let mortgage interest will no longer be tax deductible at all,
Right.
but you do receive a tax credit at 20%, which also is the basic rate of tax, which effectively means it is still tax deductible at the basic rate of tax.
Okay.
So this person would only be affected by that if they're a higher rate taxpayer.
Right. Okay. And from what we're seeing here, maybe not. Or maybe they are. But this is that it just finally, is there a better way to grow their 20k over the next 5 years, or is this still
the point
best
I make
option?
there is buy-to-let is no longer a do-it-yourself activity. It used to be. It's not anymore. There's a lot more to consider. You do need to be commercially minded and take a business approach to making money through property. And the best way to do that, if you don't already have that knowledge, is to seek professional specialist advice.
Great stuff. Okay, that's all we have time for this part of the show. We'll be back after this short break. Hello and welcome back to Property Question Time with our expert panel, Stephen Galpin, Joanna Leggett and Paul Mahoney. So on with your next question then, Stephen. Our viewer has written in to say, I've taken a 12-month lease on a house with 9 months remaining. However, I've had a small inheritance and I want to buy a property now. The landlord, however, is insisting that I pay all of the lease off. I've offered him 3 months if he lets me out early, but he's not interested. Is there anything I can do to make him release me early?
Well, I think the one thing that we need to know is what kind of lease it is, which we don't know.
We don't know.
But I would be very surprised if it's anything other than an insured short-hold tenancy. Now, what that means is it was brought in the late 80s to make sure that landlords knew that they could get their properties back and that tenants knew that they had an assured period of that tenancy. And that period was set at 6 months. Now, whether that lease is for 6 or 12 months under an assured short-hold tenancy...
Is this 12 months here?
Yeah, whether it's for 6 or 12, the lease can be broken at 6 months provided 2 months' notice is given, but it can't be given obviously before the 4-month period has passed.
Right. Okay.
So I would suggest that what she does is look at the tenancy. If it is an assured short-hold, as I suspect, she's in her 3rd month, wait till the 4th month, serve notice on the landlord that in 2 months' time that she'll be leaving, and I think that's a perfectly legal process, is it not, Paul? I think.
Yeah,
Everyone agreed with that one? Yeah, I mean, I suppose it would, maybe the other option would be finding someone who was willing to take over the...
I'm not sure that
lease.
really works. It's quite difficult. Certainly on assured short-holds, it would be very difficult to pass the tenancy rights over.
Right, okay.
So I don't really think that's a great answer to it. I mean, it might be possible in agreement with the landlord, but if he's being difficult about the term, then chances are it's going to be difficult about everything else, I think.
So if they did give the notice on the 4-month date coming up, would they, so then they'd only lose the 2 months kind of thing?
Well, they could stay there for the 2 months. They've got to pay the rent for that period,
Yeah.
but it's certainly not the extra 6 months that she's going to have
It
to
seems
fund.
to solve the problem, because they've said that they've offered 3 months,
Yes.
and that's essentially what they're offering. So
Yeah.
I think perhaps either the landlord's uninformed or is trying to take advantage of
Right.
the question
I
maybe
think
being
once
uninformed.
I think once again, we cover this so many times on property question time, is if you have a proper lease, if you use proper agents, if you get proper advice, then things don't go wrong. I always say, well, look, you both have a lease, both read it and just do what it says, and you avoid all the problems.
And Stephen, just on that note, they did mention here that they've had a small inheritance and want to buy property, that maybe should think about how long that process can actually take.
I think so. Any normal purchase is going to take probably the best part of 3 months, if not a little bit longer. But I do also think the question of having the inheritance and buying a property is a totally separate question from dealing with your lease. So I think get one thing right at a time.
Definitely.
And then you can go from there.
Great, thank you very much, Stephen. Okay, on to Joanna. We have been slowly selling our existing rental properties and buying some here in France. We normally only buy one a year or so, as I'm getting slow in my old age and it takes me that long to get one ready to rent. So we have almost completed number 3. We've got someone interested in one of the existing properties and we're going to go looking for a new one to buy. The problem is we found 3 very good prospects. Now, normally we have been buying in cash, but I'm wondering if buy-to-let mortgages exist in France, so we could buy more than one of these 3. Any advice would be appreciated.
Okay, well, of course, they do exist in France. It doesn't say, I'm not quite sure whether they're a French resident or not. Do they say they're still in the UK?
Where they say we've been slowly selling our existing rental properties and buying some in France, it makes me think they've been selling them in the UK.
resident.
Yeah.
Then it's going to be tricky. It is possible. The buy-to-let mortgages in France, they'll lend 70% of the rental value of whatever the rental value is. But because they're not French residents, getting those type of mortgages is going to be quite tricky. There are products on the market. I mean, I'm not a financial advisor, I'm an estate agent, so we can certainly recommend or put them in touch with the right people that could. I would suggest, again, go to a property exhibition or look up online for some international mortgage brokers who will deal with lots of different banks. Some banks will lend, but they are going to have to prove history of the UK that that's what they're good at, or their history in the French properties that they're renting out, until they become a French resident. If they're a French resident, it's a lot easier. English banks, for example, or British banks aren't going to lend on properties abroad. They'll only lend on the properties in the UK. So they are going to have a French mortgage as such if they are doing a buy-to-let in France. But shop around, as long as they've got very good accounts, good proof, etc. of what they've been doing in the UK. There are some banks that will lend, but they will need to shop around with an international mortgage broker.
Right, okay. And here they've said normally they've been buying in cash. So is that going to...
Well, cash is easy. If you've got cash, you just go and buy the property and rent it out. It's as simple as that. It's the mortgage problem is because they have no proof that business has worked well in France and they're not French residents. It would be the same, if I was trying to do the same in the UK. It's quite difficult for me as a French resident to get a mortgage in the UK.
Right,
so it's similar on the way back.
One thing to add there, depending on they mentioned they're selling down their properties in the UK. I don't know the size of their portfolio or how many they've got left. But if they are a UK resident, that they could potentially remortgage the properties they have in the UK to release cash and use that cash to buy in France.
Exactly, and then they would be a cash buyer again. So because they're coming with cash as such.
Good piece of advice for them, and depending on whether they want to keep hold of them or not, that could really work out for them. And in terms of where, is there anywhere in France it would be easier to get a mortgage on, or anything like that, or?
Cities, obviously, and provincial towns where they are going to be easy to let out. But again, it is dependent on the individual. They are going to have to prove that they've been in that business, they're good at rentals, etc. But it is going to be the residency that's going to cause the problem.
Okay, great. Thank you very much, Joanna. And moving on to now, Paul, a nice short, sweet question here for you. Do you have any suggestions regarding locations in the UK for the best possible returns on buy-to-let investments?
Okay, fairly common question. Returns can mean a number of things, though. There's 2 main types of returns when it comes to property investment. That's income and growth, yields and capital growth. And those 2 things work for different people depending on what their goals are. Traditionally, the London and the southeast has been quite good from a growth perspective, and the north has been better from a yield perspective. That arguably is shifting in that, for example, London has had a very good run from a growth perspective and is now, without doubt, plateauing and in some areas falling. And there's lots of speculation as to why that is, but I think it's just because it's had a good run. You know,
Right.
we're over 80% above the 2007 peak property prices in London. So like a lot of areas have more than doubled in the past 10 years, and that's a good run. Markets are cyclical.
Yeah, absolutely.
There are other areas in the UK at the moment which are doing really well in a market where other areas aren't. Places like the Midlands, specifically Birmingham, Manchester, Liverpool. Each of those cities have really strong positive driving factors at the moment. Around billions of pounds being spent on infrastructure, really strong job growth. Net migration in the UK is very strong to the north, away from London, and I think that's being driven by affordability.
Right, yeah.
A young professional in London, it's almost impossible for them to buy their own home, especially when they're first starting out. They might have £300,000 to spend on a property. You can't buy anything in London for that, really. You can go to the city centre in any of those cities I've just mentioned and buy a penthouse apartment and live for, probably 3/4 of the living cost. So for that person, it kind of makes sense. And that's not only being reflected in individual preferences, but also a lot of major businesses are moving significant amounts of their workforce to those areas, like HSBC to Birmingham, and a range of other major companies. So far as locations go, I would say the areas with the most positive potential over the next 5 to 10 years are those three cities:
Right,
Birmingham, Manchester, Liverpool. The property prices are a lot lower, the yields are a lot higher. There's a lot more room for growth there within affordability ranges.
Yeah.
Don't just buy anything there. Buy the right properties in the right areas. But from my perspective, I think those areas have the most going for them at this point in time.
And in terms of things like transport links as well, there's lots of change going on here. I mean, I know there's one coming from Birmingham to this particular area
You've
where
got
we're filming today.
HS2,
Yeah.
which goes into Birmingham. That will make a massive difference. 45 minutes into London from Birmingham when that's done. And I believe it's due for completion in 2026.
Yeah.
That goes all the way through to Crewe, which is only 20 minutes to both Manchester and Liverpool. And then you'll have HS3, which goes through Manchester to Leeds. So that will really open up transport links and the ability to do business across all of those cities. But that's just one example of the whole Northern Powerhouse scheme, which is aimed at better utilising the northern cities.
Great stuff. Okay, thank you very much there, Paul. And thank you to all of our guests for today, Paul Mahoney, Joanna Leggett and Stephen Galpin. That's all we have time for today. But if you have any property questions and would like to get in touch, then please do. Our website is property-tv.co.uk or info@propertytelevision.tv is our email address. So do get in touch if you've got any questions. Thank you for watching and we'll see you soon.